Hello, world. Welcome to the Shannon Joy Show. At 123.com/joy. Everything that you're going to need for preparation: generators, solar panels, Faraday products. If you want to disappear and protect yourself from the surveillance state, they have an entire line of amazing Faraday products called dark bags. They're always 10% off at the satellite phone store if you go to sat123.com/joy. That is sat123.com/joy. The satellite phone store has supported the Shannon Joy Show for many years. They are amazing partners, and let's help the companies that help keep the lights on here at the Shannon Joy Show. So if you are in the market for any of their products or services, make sure you use that promo code JOY and go to sat123.com/joy. That's sat123.com/joy. I am so proud to be working with Peter Schiff and Schiff Gold in 2026. There is no one that I would trust more to send this audience to in terms of a metals strategy, whether it's your gold and silver physically that you purchase and keep in your home or in a safety deposit box, gold and silver in an IRA, which you can do through Schiff Gold, or even investing in gold mining stocks, which Peter Schiff and his team can also help you with. It is time to get that metals strategy in place. Right now, silver and gold are soaring. Silver is approaching $85 an ounce, while gold is up over $45 an ounce. And people don't see this stopping anytime soon. I know it seems expensive to you, but I don't know that there is a cap to this in the near future. So you can get started now. I want to encourage you guys right now to go to schiffgold.com/joy. That is schiffgold.com/joy. Everything that you need, Peter's analysis, market reports, research reports. You can get plugged into his investment services, physical gold and silver, which we're going to be talking about this month, and also protecting your retirement with a gold or silver IRA. It's all right there at your fingertips on my page, schiffgold.com/joy.
Welcome back to the Shannon Joy Show. This is Aaron Day. I am honored to be filling in for Shannon both today, Wednesday, and tomorrow, Thursday, while she's on vacation. And so I have a great guest today. In fact, this guest and I have both appeared on Shannon's show before together. The guest is Steve Patterson. He is the co-author of the book, Hijacking Bitcoin. And today we're going to talk about what has become all of a sudden a kind of a mainstream news topic. You've probably noticed that the price of Bitcoin has been very volatile. It's dropped almost 50%. It's rebounded a little bit. But in part, people are now starting to question the whole nature and purpose of Bitcoin. And for most people that are new to Bitcoin, they've only heard about it as being a store of value, or they'll call it digital gold, but it's something that you're supposed to hold on to, not use as a currency, which is not how it started out. But people have started to question this, and they've started to question it for, I think, two reasons. One, Bitcoin has not been performing well compared to precious metals over the last couple of years. So if you're making the argument that, hey, Bitcoin is great as digital gold, then you would have to say, as compared to what? And, in the recent weeks, even before this sharper drop off with gold at, one point, I don't even know where it is today, but above 5,000, and silver climbing dramatically as well, people are starting to say, is this really digital gold? But then beyond that, a tremendous amount of information has come out in the Epstein files that show not only Epstein's involvement in Bitcoin, but it also shows a lot of the other players. And in fact, it dovetails into the book Hijacking Bitcoin, which was published in, I believe, April of 2024. Am I right on that,
Yep.
Steve?
Yep.
Which went into phenomenal detail with, almost 300 citations. I'd had Roger on, I've had Steve on, and to date, no one's actually refuted any of the factual points or references in the book, and people have even declined when offered up to $500,000 to debate the contents of this book. So I'm really grateful to have Steve on, because they were trying to warn people about this well in advance of recent revelations. So Steve, thank you for coming on.
Yeah, thanks for having me. Great to see you again.
Yeah. So I guess as a starting point, let's assume, and by the way, I've given talks all over the country and now increasingly over the world about CBDCs and Bitcoin. And most people, even though people in crypto are familiar with this concept or debates around the concept of hijacking Bitcoin, 99+% of the world has never heard of any of this. So would you mind giving the audience kind of a brief overview, kind of a non-technical overview of what's in hijacking Bitcoin?
Certainly, and I'll give it from sort of a perspective of somebody that's been around in the industry for a long time. So I worked with Roger Ver, who in writing the book, and he is known as Bitcoin Jesus. He's an early investor who discovered Bitcoin in 2011. He was one of the earliest, or maybe the earliest, funder for a bunch of different projects in Bitcoin. That's been his main project for a long time now. For myself, I also heard about Bitcoin back in 2011, and then got interested in it a little bit later on, based on the economics of Bitcoin. I was really interested in monetary economics, and this Bitcoin thing was an interesting concept. And so my family, even my extended family, has started working in the Bitcoin industry very early on, probably 2013 or so. I was writing articles about it online for places like the Foundation for Economic Education. My wife worked at one of the big Bitcoin payment processors. Brother wrote a book on it and co-founded a crypto company. So we've been in the Bitcoin world for a long while. And what we observed is the transformation of an interesting, promising young technology from being an attempt to have a new type of money that people could spend on the internet. And it turned into a project which is some kind of financial investment that you're supposed to buy Bitcoin and hold Bitcoin, and you're never really supposed to use it in commerce. And so I saw this play out myself personally. The gentleman, Roger, I wrote the book with, also saw this play out personally and professionally. And the story of hijacking Bitcoin is all of the details of how we went from there to here. And the summarized version is that though many things are said about the so-called decentralization of Bitcoin, supposed to be a project that nobody controls, in practice, there are some central points of control and leverage over the network. And that turns out to be from the software developers. So at the 10,000-foot view of Bitcoin is it's supposed to be an alternative currency, and but it's digital. And so because it's digital, it means it requires software development in order to keep functioning correctly. And those software developers who are determining what gets put into Bitcoin software and what doesn't turn out to have an enormous amount of power over the protocol. And so over several years, those software developers formed, or a big chunk of them formed, a company called Blockstream, which was very suspicious as soon as it was created in 2014. And there's been a ton of criticism over the last decade plus on this particular company. We said, here's terrible conflicts of interest. They don't seem to be doing things that are benefiting Bitcoin, but they're doing things that seem to be hobbling Bitcoin, in fact. This company, I would say, would be the most influential company in Bitcoin's history. So it gets a great deal of attention in the book. And jumping ahead here, it turns out that all of the smoke around this company, Blockstream, came from a raging fire. And in fact, that fire might have at least part of its origins on Epstein Island. So just returning back to the hijacking Bitcoin story, we had a promising young technology. The software developers got a ton of control over the project. They actually turned it into a new project that was much more favorable to the financial and political establishment, sort of de-toothed Bitcoin and all the properties that made it very revolutionary, the properties that made people like myself and Roger Ver and a bunch of other libertarian-minded folks get really excited about it. And then my own part of my own personal motivation for writing the book was that so I could leave the cryptocurrency industry at peace, because I felt like I had too much information to just leave it and not say anything. I saw so much corruption and very terrible ideas in Bitcoin and crypto. I said, okay, I don't want anything more to do with this, but I have to, what they say is voice and exit. You speak your voice and then you exit. So hijacking Bitcoin was, on my side of things, an attempt to do voice and exit. But yes, just as you mentioned, just like in the last few months, we're getting all these emails from Epstein, and it turns out that a whole bunch of essentially everything we were saying, go figure, turns out to be correct. So we were doing an expose about the corruption and what happened to Bitcoin, and then now we're getting the receipts are finally being delivered with some of these emails coming out.
Yep. I mean, that's a great overview. And I actually want to give people some context for this because, you may be listening to this and say, well, I don't want anything to do with crypto, or, I hate crypto or whatever. But I think there's some important context here, even when you go back to the launch of Bitcoin. So if you go back to 2008, after the financial collapse, you actually had, some level of unity in the United States. You had the Occupy Wall Street movement on the left, and you had the Tea Party on the right. And at that moment in time, everybody was angry at bankers. This was after the trillions of dollars of bailouts and 10 million plus people lost their homes, so on and so forth. There was actually some consensus that we needed a better solution, and we didn't get one. All we did was, shift the risk and kind of socialize the losses. The bankers kept their jobs. The bankers are now larger, the banks are larger than ever. And they've actually continued to take on similar risk. So, nothing was fundamentally addressed. And so when Bitcoin was launched, because I know most people actually don't know this story at all, because the prevailing narrative is that Bitcoin is a speculative investment or maybe digital gold. But in the very early days, the whole idea of it is we don't need these banks. We don't need these central banks and governments getting involved with inflating the money and bailing out the bad actors. Bitcoin was something designed to be used for day-to-day transactions. It's called peer-to-peer digital cash. This was the excitement. This was the enthusiasm. When I learned about Bitcoin in 2012, and I heard Roger speak and others, and I live in New Hampshire, where there was, pretty aggressive early adoption. There were stores and restaurants in New Hampshire where you could use Bitcoin, all the way back in 2011. There were meetups, so on and so forth. This has become, so it was something to solve, what kind of both sides, both of the main sides of the ideological spectrum, were concerned about. And why it's important now is the situation that we're in is actually worse than we were in 2008, because what we are facing now is the threat of technocracy, the threat of kind of complete centralized control, where you have, programmable digital currencies that the government can program, track in real time, censor, shut off your money if they don't like your behavior. And this is moving at a really accelerated state. So what's important about this hijacking of Bitcoin is we've now gone from, 2009, 2010, when this launched, being in a position where maybe we had a tool to fight back, to now it's been weaponized against us to the point where we have a lot of people believing a hijack narrative, and all they're really spending all of their time and resources on is something that's trackable and doesn't actually address the root cause. This is why this is actually critical to get this information out now.
Yeah, let me just say one thing on that. So, people think that Bitcoin is an alternative money that's supposed to get you outside of the the traditional financial establishment. And that was definitely the case in 2012. And it is definitely not the case in 2026 for almost everybody. There's going to be some exceptions here and there, but for almost everybody, what Bitcoin is in practice, it's been turned into something that's called custodial Bitcoin, which means a company holds and owns your Bitcoin on your behalf. So you have you download the Coinbase wallet, you buy some Bitcoin, you think that you own it and you're sending it to somebody else and you're participating outside the monetary system. But what's actually going on is effectively it's like a PayPal account. You have an account at the company Coinbase. They say that they're going to hold your assets for you, and then you're trading essentially like tokens that they issue you that don't necessarily correspond to actual Bitcoin. Or the same thing, at least it was the case in the PayPal wallet. If they still have Bitcoin incorporated, I haven't used it in a long time. That was just totally custodial. You think you're sending Bitcoin to somebody else. But it's just literally like sending a PayPal transaction. It's totally centralized, it's totally custodial. Same thing if you think you're going to buy it and you're going to hold it indefinitely. Well, the way that you do that is you go through your broker that's been KYC'd, and you go through a company, and they actually hold the Bitcoin for you. So that system is in no way whatsoever an alternative monetary system. That's that would be that is the hijacked Bitcoin that has no teeth left. There's nothing threatening or exciting or revolutionary about that. It's just an asset that one trades on a company as if you were trading a stock.
Yeah, it's definitely not peer-to-peer cash, and most people aren't aware of. So Bitcoin is on it's a public blockchain, so the transactions are actually transparent. Now, there are steps that you can take to try to conceal your identity, but the truth is that the original vision of this was to be something that would compete with Visa or MasterCard. I mean, even early on, I think Satoshi talked about 25,000 transactions per second as something Bitcoin should be able to do in the early days, and then actually growing and scaling from there. And I think the idea was, which I think is probably flawed if we look back at it now, but if you had that much transaction volume, it would actually be somewhat difficult to trace people's transactions. I think that didn't necessarily take into consideration AI and some other things, but Bitcoin in its hobbled form only does 7 transactions per second. And there have been organizations that, for one company in particular called Chainalysis, which since 2014 has been tracing these blockchain transactions. And they've been working with exchanges, they've been working with law enforcement all over the world. And it's really critical that people understand this. I've actually done quite a bit of research into Chainalysis, and it's now to the point where private investigators can sign up and get access for less than $10,000 a year to this chain analysis tool, where you can put in one address and you can actually have all these tools for tracing and tracking someone's transactions. Last year, I had 3 different people come to me with either divorce cases or business disputes, and they were on the opposite side of someone who'd hired a private investigator, and the private investigator was able to find more transaction history going back further for their Bitcoin transactions than through the bank, where they usually only hold or retain these records for 7 years. And so there are a lot of people that are completely unaware of that, because there's a lot of propaganda supporting and pushing the hijacked digital gold narrative, but there are a lot of fundamental pieces of information that are not true, even within that hijacked narrative.
Yes, that's true. And there are some steps that we could have taken 10 years ago that would have made chain analysis harder. But you're right; it's a public blockchain. It's been that way from the beginning. There was also a narrative from the beginning, a narrative that this was anonymous money. That has never been the case. It could be called pseudonymous money. There's a difference between the two. The details don't matter, but it's not and has never been anonymous. So in its current form, it would be hard to imagine a better technology for the technocrats to be using than Bitcoin. It's like every single transaction is public on the blockchain. And even if you hold your assets off of exchanges, well, if in the course of, exchanging with people, anybody, and anybody that you're sending coins to, uh, within their network that has had their money touch an exchange, that's all going to be KYC'd. So different parts of the transaction node network and the transaction history are going to have real names or real faces of people that we know their IDs, we know what the transaction was used for. And so if you're there's certainly a version of Bitcoin which is completely dystopian, and we're not very far away from that now. It's already pretty dystopian.
Yeah, I mean, and we'll get to that because we now have, a lot of people think Trump won and he signed an executive order saying we're not going to have a CBDC, and a lot of people have relaxed. And in reality, we actually have something worse, which is this Genius Act, which essentially takes private, what are called stable coins, which is a cryptocurrency where, one token represents $1, and put that under the control of Congress, which is the body that produces financial regulation for kind of violating your privacy. And this actually ties into the Bitcoin story, and we'll get to that. But if you're new to Bitcoin, you hear a lot of things. What you hear are that, Bitcoin is completely decentralized. And you hear that, in fact, the other thing that they say is there will only ever be 21 million Bitcoin. So I'm going to address, kind of some of what the current narrative is around Bitcoin, and then we can review that in the context of hijacking Bitcoin, maybe address some of these things. But the first one is this big one about, it's completely decentralized, and you have all these nodes and all these other players involved, and it's open source, and therefore it's great by default because it's open source. But it turns out that people don't develop software for free, and people generally don't go around auditing software for free. So the fact that Bitcoin is open source in and of itself, I mean, it's great that it is transparent and that it can be publicly reviewed. But the truth of the matter is, how many people are actually auditing the code of Bitcoin or have the capacity to audit the code of Bitcoin? Yeah. So while you hear these things being bandied about how great it is that it's open source and everything else, somebody has to pay for the developers, and then there has to be some process by which the code gets changed. So do you want to talk a little bit about that?
I certainly do. Yeah, I hear this one quite a lot. So a few things on open source. So let's deal with the second part of that question first. Open source doesn't mean that there are no hierarchies of power, let's say, and decisions have to get made regarding what code gets put into Bitcoin software. And just because it's open source, that means anybody can review it. That doesn't mean that anybody can get their code added to the Bitcoin repository. Sometimes people think that's what's going on. That's not the case. You can write it. You can pitch your code to a group of core developers that have the authority to merge the code into the software or not. But just because you pitch the code doesn't mean it will be accepted. There's an unlimited number of examples of talented developers who think, hey, look, I've got this cool idea on Bitcoin. I want it to be incorporated. And then they pitch it to the core developers, the group of individuals that has the power to actually make the code changes. And then it gets shot down, and then it's just instant politics involved in the core development process. So it being open source literally has no bearing on whether or not there are hierarchies, very strict and small. There's actually a very small group of people, a handful of people even, that are ultimately calling the shots, determining what gets put into a Bitcoin's code. There's another aspect of this, which is, just because something is open source doesn't even mean it's secure. We've seen in the last 10 years massive bugs in open source software that's used all around the internet. You had, I believe it was Heartbleed. I forget all the details of that, but it was something like, I think it was one of the. I think it was also a Wi-Fi protocol or an internet Wi-Fi protocol hack. that was based on open source code, and there were like critical vulnerabilities that get discovered. So you have software that's in the open, but also has bugs all the time. So they're generally the idea of it being open source is important because it means you can verify that some of the cryptography checks out for yourself. That's good. That doesn't mean that, there's a billion different parts of Bitcoin's software that the average person is not going to be able to verify. But you don't have to trust that it's like some company's private cryptography scheme. You can actually, you can run it and verify it yourself. That's good, but that in no way whatsoever means that the project is totally decentralized. And if you talk with people who are actually real developers in this space, not the talking heads that have strong opinions online, everybody, without exception, 100% of the people who are in the development space know that Bitcoin Core is a small group of developers that ultimately call the shots on what gets merged into the code and what doesn't. It's a small, I'm talking, no more than 5 people at the end of the day. And really it's less than that. These are the people that ultimately you have to appeal to get your code incorporated. That's just a fact.
Yep, that is a fact, and again, it's not particularly well understood or appreciated. And if you read the original white paper, so again, the whole idea behind it was it's supposed to be peer-to-peer digital cash, but the way that the system is set up is it has what are called miners, that you basically have these computers all over the world that are competing to solve these math puzzles. And if you solve the math puzzle first, you get what's called a block reward. And the way that the system was set up was initially these blocks are mined every 10 minutes. So initially, you would receive $50 Bitcoin every 10 minutes. And then that amount gets cut in half every 4 years until 21 million Bitcoin are issued in total. But the entire concept, the entire economic model of the system is that the block rewards are there to be an incentive for people to start mining these Bitcoin until such time as there are enough transactions where the miners can actually build their businesses, because they're doing 25,000, 50,000 transactions per second, and they're getting a real small amount on each transaction. But this is what creates a viable, sustainable business, and this is how the network is secured.
Mm-hmm.
And so this is an important part of this, because I just wanted to kind of throw that in there, because it relates to the whole hijacking. So
yeah, I can explain why this sounds like a great idea, and then how this model was turned on its head. So what you've articulated is correct. In fact, we have a message from Satoshi Nakamoto, the creator of Bitcoin, saying something along the lines of, I'm sure that in, I want to say 20 years or 30 years, there's either going to be on a huge amount of transactions on Bitcoin or none at all. He was envisioning that because this was going to be peer-to-peer cash online, there would be hundreds of millions, billions of transactions that are going to be on this regularly, and it can handle that fundamentally. The principles, the basic structure and principles and technical idea that Satoshi came up with worked. However, the software developers that we talk about in the book got in their heads that, Satoshi's design, we don't really like it. We think that it's got some fundamental issues. It can't really scale. And so they said, what we're going to need to do is build second layers on top of the first layer and keep the first layer really, really small. And instead of financing and paying for security on the Bitcoin network by the miners getting a small amount of transaction fees over a huge amount of transactions, we're going to have the transaction fees be thousands of dollars per transaction, and you're only going to have a small number of them every 10 minutes. That was the idea. They literally inverted the entire model of how Bitcoin is supposed to work and how miners are supposed to get paid. And they said, oh, well, in fact, we have, as we quote some influencer types in Bitcoin saying, actually using the first layer of Bitcoin is going to be as rare as chartering an oil tanker to take oil delivery. If you know how that market works, there's a bunch of trading on oil prices, but almost nobody's actually taking delivery of oil. It's very expensive to do so. So the idea was, well, you're going to have, in fact, we have, there's a clip of Saifedean Ammous, who's the author of the Bitcoin Standard, which is the most popular book on Bitcoin ever written. He's giving a talk, and he says essentially these node runners are going to be like central banks. His term, he's saying he's envisioning there's going to be like kind of a new, just more decentralized central banking system with a few thousand nodes, and they're going to be in this. They're going to be processing transactions where the transaction fees are, thousands and thousands of dollars per transaction. There's just an itty bitty little problem with this this new way of building on top of Bitcoin. It's that their second layers don't work, or they're entirely custodial. So the development of Bitcoin was completely derailed for promises of second layers. We're going to have this amazing technology called the Lightning Network, and the Lightning Network is 50 different massive technical problems that it's not going to end up scaling successfully at all. In fact, a lot of the Lightning developers are now finally, after several years, jumping ship and saying this is kind of a failed project. You can use it, but it's not something, it's very buggy. It's very technically intensive. You can lose money on it fairly easily. And so what has happened is in the wake of the failure of viable second layers that are true to the spirit of Bitcoin, we got second layers that are just custodial Bitcoin. So instead of individuals having to use the Bitcoin technology and pay an arbitrarily high fee, they don't know if it's going to be a penny or $50 or even $1,000. You just let companies handle it for you. And instead of using the Lightning Network yourself and running a node yourself, you download a wallet that says it's using the Lightning Network, but it's somebody else's node, and you're not, and they are moving your funds for you. So in practice, we've got second layers that, mission accomplished, but the second layers are entirely controlled by central authorities, which sort of defeats the whole point of Bitcoin in the first place. So this is it's kind of scandalous, in the history of Bitcoin, if people realize that the economic structure of Bitcoin, the economic system, the economic design was completely and utterly inverted. And intentionally and by design, we have quotes in the book of multiple developers celebrating when transaction fees hit $20 per transaction. They think this is an important milestone. It sounds utterly ludicrous to the average person, and it is utterly ludicrous. And then now we learn, so many years later, well, all those promises we made about this awesome new second layer technology, it doesn't really exist, and it doesn't look like it's going to exist.
Yep. Yeah, and then people keep shifting the narrative. So you may see this, and I put a post on this. There's this guy, Jack Mallers, who you may see these clips from him. He goes on TV, and he's in this huge closet. So he's usually wearing a baseball cap with an empty closet, but he's always there talking about the Lightning Network because he's created a company called Strike that is a Lightning Network company. Well, I looked at the terms of service and analyzed the terms of service for Strike, and it's full KYC. They actually keep your entire transaction history. So in essence, we're not replacing the central bankers. We're actually changing them out. Now it's Jack Mallers or Jack Dorsey with Cash App, but it's completely centralized, and there's reporting happening. The biggest debacle, I think, of all of Lightning Network is El Salvador. This is another area where Bitcoin maximalists like to, trumpet the success of Bitcoin because El Salvador, at least at one point, had decided they were going to make Bitcoin legal tender, but they gave everybody a custodial wallet called the Chivo wallet. And it turns out it was completely custodial. It could be tracked, but on top of that, it was hacked, and the entire population of the entire country was doxxed. So, so part of this was the conversation is I want to kind of let people know the propaganda that you're hearing today. I want to kind of give you some context that actually, 21 million. Well, we'll get to that, but the 21 million cap isn't set in stone. Lightning Network is not decentralized. There's tracking by necessity, but then you come down to this problem of when you push all of the transactions to this second layer, it takes away the transaction revenue for the miners. But what it does is it stresses and it breaks the entire fundamental economic model that secures the network.
Yes, and unfortunately, there's quite a lot of people who don't understand that the economic system that Satoshi created is just as important as the technical system. If they think if it's not in software code, then somehow it doesn't exist. And so because the code has remained the same for some period of time, that means the system must remain the same, and there was no redesign. But what happened is, in fact, it's probably worth explaining the story just a little bit. Non-technical, just the basic overview. Satoshi designed Bitcoin to scale more than 7 transactions per second by what are called block size increases. That just means that essentially the amount of transaction throughput you get goes up. It was completely non-controversial. That was the idea that Satoshi had for how to scale the system. The whole thing makes sense in that context. It doesn't make much sense in any other context. But while it was in the early days, Satoshi had a limit, an artificial limit he called the block size limit. Well, actually not in the earliest days. There was no block size limit in the very earliest days, but fairly early on, he put a temporary limit, said, hey, while this network is still really young, let's have this block size limit. And then as it grows, we'll uncap it. And then, we can have the network scale based on having larger blocks. Okay, why does that matter? Well, this is one of those details that people really get tripped up on because one of the ways that the software developers hijacked the project was by not changing this limit. So this limit of 7 transactions per second is comically tiny. It's insanely, unbelievably small, and it's completely unnecessary. And the way that they were able to then turn Bitcoin into a different project is by not changing the code. So what they'll say is, well, where's this big change you talked about? We didn't really change the code very much at all here. And the trick is by not changing the code, you completely inverted the design that Satoshi created, because there's an economic model that follows from the code, and the expectation was this code is going to change in the future, and so the rest of the invention makes sense. Let me get an analogy I just used the other day that people seem to like. Imagine that somebody is a car designer and they come up with a new type of car, and in terms of gas mileage, they get 10,000 miles per 10 gallons of gas. And while the developer, the inventor, the engineer, while he's working on it, he says, okay, while I'm working on it, I'm gonna put a limit on the size of the gas tank to keep it 1 thimbleful of gasoline, because I don't want it to spill while I'm working on it. Everybody who gets excited about this project understands, well, obviously, when this baby starts to take off, we're not going to keep it with a thimbleful of a thimble-sized gas tank. And yet, imagine now that the engineer leaves, and a new set of developers come in, a new set of engineers come in. They say, you know what? We don't actually like that original design. We're going to keep that thimble-sized gas tank indefinitely. We're going to do something else. And then, sure enough, 10 years later, the car that they come out with breaks down every mile. It runs out of gas every mile because they refused to increase the size of the gas tank. That would be an obvious example where you go, well, clearly, despite the new engineers not changing things, in some sense, they obviously changed the whole design, and in fact, it broke the design in hindsight. That's exactly what happened with Bitcoin. Now, it's worth also mentioning too, this will affect these other sacred features of the Bitcoin network, like the 21 million cap. So so let me just explain this a little bit, because it is directly related here. There is this sacred assumption that there's a limit of 21 million Bitcoin, and that limit will not be ever, that limit, in fact, cannot be increased. Each one of those coins, by the way, can be divisible down to 100 million units. Just so we're dealing actually with 21 quintillion, I believe is the number, 21 quintillion or 2.1 quintillion individual units there. It's just easier to say 21 million. Part of the pitch, and I remember I fell prey to this. I wrote a book on Bitcoin back in 2014, and I also fell prey to this idea that's in the book as well, that I didn't think that this was a limit that could really be changed. And so this gets taken to the extreme. Some people say, well, it's mathematically impossible. It's as certain as the laws of physics that the Bitcoin limit will never be exceeded because it's written straight into the code. Well, the problem is it's written straight into the code, and code changes. So you can, in certain situation arises, you can change the 21 million limit. It's not actually a fixed thing. Now, why would they do such a thing? Well, one reason they might actually do such a thing is just not just academic speculation, is because of this problem we were talking before about, where the miners have to get paid to secure the network. And if they don't get high transaction fees, because there isn't a significant transaction volume and people don't want to pay $10,000 per transaction, and the block reward is diminishing, so instead of 6 coins per block, or 4 coins, or 1 coin, or 0.1, imagine it's 0.00001 or 0 coins. Then where did they get the money to justify all of this investment in computer power to secure the network? This is actually now a serious problem in Bitcoin. And one possible answer is, okay, well, maybe we tweak that 21 million limit a little bit. Maybe what we say is indefinitely we're going to have 0.001 coins or whatever released every block ad infinitum, so that the miners can continue to get paid. Not only is that completely possible technically, we're going into a world where that's going to actually be a live proposal. And in fact, at least one Bitcoin Core developer has already proposed it on multiple occasions, that maybe we'll need to re-examine that 21 million limit. And again, we're talking, this is as sacred as it gets in Bitcoin. People really don't think this is even possible. And yet it is not only possible, that's going to be a greater and greater concern here in the next, even in the next 10 years.
Yeah, I mean, this is exactly the case. And if you look at any of these ETFs, BlackRock ETF or Fidelity or whatever, and you analyze those contracts, it actually has in there as a specific risk factor that the 21 million supply might be increased. And what you mentioned about a developer that's been floating this proposal around, a couple of years ago, there was a documentary on HBO about Bitcoin. And the whole premise of it was they had their theory on who they thought Satoshi was. It was this guy named Peter Todd. And so I disagree with the conclusion of the documentary, but it's this guy, Peter Todd, who is the one who has been proposing the increase to the 21 million cap. And you can actually notice, I mean, it's kind of absurd to be a Bitcoin miner at this point in time, because if you look at it, what are you doing? You're basically burning a bunch of energy to get your percentage of the lottery winnings, which is what the block size reward is, because you're not actually moving transaction volume. So it's not a particularly good business. And as the price of Bitcoin crashed recently, I mean, if you think of everything that's involved, if you're a Bitcoin miner, you're spending tens of millions, maybe hundreds of millions of dollars on equipment. You have electricity costs, you have facilities costs, and everything else. So when the price is that volatile, it can wipe mining companies out. And then it actually creates this further test where what happens is the price drops, and then the miners actually have to sell the Bitcoin that they have just to be able to fund their operating expenses. And so this is a downward spiral that we see when there's a really big drop off And this happened just a week or two ago, where there were some pretty significant hits by some of the mining companies. So
yes, and speaking of revisions to our previous models of how Bitcoin worked, I mentioned before I was myself tricked about how hard this 21 million limit is. And if we can offer some criticism, perhaps in hindsight, of Satoshi's design, part of the idea is that you have the miners who are going to be massively invested financially in the health of this network. And they literally, even years ago, even a decade ago, they were spending tens of millions of dollars on mining equipment. So the assumption was these are going to be very competent individuals who are aware of long-term issues with the network if they were over reliant on the block reward, for example. And what we saw in practice is that miners all around the world tend just to be set it and forget it types. That mining has, and maybe this is because of what happened with the block size wars, I'm not entirely sure, but it was happening during them as well, that the promise of mining in practice is, hey, I'm going to get a mining rig and I'm going to put it in my basement, or I'm going to get a warehouse full, and then I'm just going to plug them into the wall, and then it'll create money for me, and I don't have to think too hard about anything else. So that turns out to be kind of a systemic problem, because if the miners are not aware of the power and importance that they have in the Bitcoin network, then you risk something happening, which we saw in Bitcoin, which is that power moved over to a different group. In the case of Bitcoin, the Bitcoin core developers that essentially assumed the role as leaders of the network. And if you read a lot of the writing of early Bitcoiners, myself and a bunch of other people in the industry, 11 years ago, people are all singing the praises of how important the miners are, and which of course they are in terms of how Satoshi designed it. But we overestimated their tolerance for discomfort and their desire to actually wield the power that Satoshi gave them. So that's just another one of those concepts, which in hindsight, I think people like myself were a little bit naive in thinking that everybody understood how this system worked and who holds the power and who doesn't. And then in practice, we saw a lot of people just simply wanted to defer. They didn't want to think too hard about long-term incentives or anything like that, and they just wanted to take orders from the Bitcoin core developers that we then would learn had massive conflicts of interest.
Yeah. Well, I mean, that's exactly right. And I mean, now's probably a good time to talk about some of the mechanics of the hijacking and some of the recent information that we have. And I want to start off by talking about, again, I wrote an article a few years ago, and actually in my book 3 years ago, talked about the fact that we knew that Epstein was involved in funding, or at least we thought he was involved in funding, all 3 U.S. CBDC projects through MIT. But that didn't even scratch the surface of Epstein's involvement. Now, I'd also written at that time about the fact that there was only one public article ever written by Epstein, or an interview with Epstein, and it was in a publication called NextAweb in 2017. And it was in that article where he presented his view that he didn't think that Bitcoin was a currency, that he thought it was digital gold. So it's really interesting that the one and only time Epstein comes out and makes any public comment on Bitcoin, it's to push this hijack narrative. And I thought that was weird at the time. That this is part of why when I found that article, when I was working on my article, I thought, well, hey, maybe Epstein had more involvement with Bitcoin, and his funding of these CBDCs might be related to some of the work that MIT was doing. Mm-hmm. But this is when now we uncover all of the rest of this stuff. And I encourage everybody, I'm not going to go into all of the detail, but this starts with a guy named Brock Pierce. And, I encourage you to search up his name, and Digital Entertainment Network company, DEN, as it went by. You can research that on your own. Brock has a pretty storied past from, a couple of other startups prior to getting into crypto. But we now know that he met Epstein in 2011 and basically began advising Epstein on crypto going back as far as 2011. So this is just shocking information. And these emails show things like, okay, 2014, Epstein invested in Coinbase through Brock Pierce, and the emails back and forth are, hey, here's the name of the company we're going to funnel your money through, right? I mean, we have explicit detail here, but there's something truly fascinating, and I don't have all the details on this either, but as we've discussed, Bitcoin is an open source protocol, and there was a group that was formed called the Bitcoin Foundation, a nonprofit group whose purpose was, to preserve the integrity of the development. So it basically raised money from a variety of different sources, but with I viewed it as the mission of, adhering to the vision and to prevent hijacking. But it turns out that somehow, and I don't know, Steve, if you know when this happened, but Brock Pierce became the chair of the Bitcoin Foundation.
I was just trying to figure this out recently. I don't know the answer.
Okay. I don't know either. He was not there at the beginning, though. There were 5 people at the founding of the Bitcoin Foundation. He was not one of the 5. So I don't think he was not the founding chair of the Bitcoin Foundation. But where this becomes really important and where these kind of timelines merge on CBDCs and the hijacking of Bitcoin is in a couple of different areas. One, we find out that Jeffrey Epstein invested $500,000 into Blockstream in 2014. Okay. So as a timeline, so this is really interesting. So remember, as Steve said, Blockstream is this company that was started by some early Bitcoin Core developers that their business model is basically requires Bitcoin to be hobbled because they are selling these second layer solutions, liquid network, and so forth. Mm-hmm. So in 2014, Epstein invests in this. And then the Bitcoin Foundation, which is at this point chaired by Brock Pierce, collapses. And, there are a variety of, I'm not suggesting he caused the collapse. There were a variety of different things going on. But it just so happens that when it collapsed, this group out of MIT that I mentioned earlier that worked on all 3 US CBDC pilots later ended up being the one to take over the funding of the main developers. And I had suggested in an article, I think maybe Epstein might have funded that, but at the time I'm like, but it was kind of indirect. We knew he put several $100,000 into MIT, but MIT invests in a lot of stuff. So wasn't sure if it was explicitly related to Bitcoin. And now we know from the emails, he talks about explicitly funding these developers.
Yeah, and to put a little more a spice on there as well, I don't remember if it's him or the gentleman he was working with, Joey Ito at MIT, but there's a line in one of the emails where he talks about the failure of the Bitcoin Foundation, and he says something along the lines of, to paraphrase, there was a power vacuum after the failure of the Bitcoin Foundation, and we wanted your money. It must be. So this is Joey Ito talking to Epstein. We wanted your money so that we could essentially start influencing the Bitcoin developers. There was a power vacuum, and your money is going to help fill that power vacuum, and we felt like we succeeded.
Yep, that's exactly right, and they did succeed. And what those developers ended up funding and or kind of gatekeeping, because Vladimir, one of the developers, became the gatekeeper for the code, was SegWit and Lightning, which are the two changes that kind of cemented Bitcoin as being digital gold and not digital cash. So going back quickly to the timeline, Epstein invests in Blockstream, which profits off of these second layer solutions, and then 8 months later funds the developers that cement the changes to basically benefit Blockstream.
Yes, and I want to skip ahead a little bit, and then maybe we can come back, because $500,000 is not that much money. However, that's also not all the money that's going into Blockstream here. So the surprising thing in my mind is that's just $500,000 of Jeffrey Epstein's money, like unambiguously. It's literally him. It's not just his network or his extended network. This grand cabal is like literally him. Through, I forget what the name of the fund was, but into Joey Ito, and that's that. There is There are hundreds of millions of dollars that are moving into Blockstream via other methods that we've learned even since publishing the book in 2024. Blockstream has raised, okay, I'm gonna get all the exact numbers wrong. But what I could tell you is at this moment, they have raised as a company more than $500 million, more than $500 million of investment. And they don't really have a clear business model other than they're selling second layers. We do have an email from one of the Blockstream co-founders named Austin Hill. I think this was Austin Hill, who is, if it's not he, it's another one of the core developers, who has all these grandiose ideas about funding things like, universal health care for people. He's got this silly, grandiose vision of what he wants to do with all his money he's envisioning in the future. And it was going to be based on taking a percentage cut of entire nation states. The idea being that Blockstream was going to onboard nation states to issue their own currencies on top of their proprietary network, where they get a cut of the transactions. So, and that's not all. We also have Tether is another one of these entities, which has a huge amount of smoke around it, and now there's a bit of fire as well. Tether is a stable coin company. They're supposed to be it's supposed to be a token that you trade that's backed up by a US dollar somewhere, and it's incredibly popular and probably the most critical piece of crypto infrastructure right now is Tether. It's integrated into most things. Well, again, I might get the details wrong here, so somebody will have to fact check me. But Tether and Bitfinex, which is a crypto exchange, both essentially have like the same C-suite. I think it's like this. I forget what the parent company is called. I want to think it's iFinex or something. Okay, yeah.
Yep.
Okay. Well, it turns out that company has invested hundreds of millions of dollars in Blockstream. So you have a Tether to Blockstream connection that is absolutely direct. And Tether, turns out, was co-founded by Brock Pierce. So the Brock Pierce being so just to zoom out, okay? Brock Pierce turns out to be somebody, it's in the Epstein emails, clearly connected with the guy, introduced a bunch of critical crypto people to Epstein. Brock Pierce co-funds Tether. Tether, over time, would eventually, either them directly or through their parent company, would pump hundreds of millions of dollars into Blockstream. Now, the way I look at this, personally, I'm not saying this is the case. I'm just saying what my interpretation of this money moving is. I interpret this as something like payoff, that Blockstream was tasked to delay Bitcoin adoption until you could get a CBDC rollout, stablecoin rollout. And if they were successful in delaying for 7 years, 8 years, then they would get a payoff. And so the fact that we've seen unbelievable amounts of money moving from that entity to Blockstream, even though they don't have a clear business model, it smells like it's something like a payoff. Whether or not that's exactly what's going on, I don't know. Again, I don't claim to know, but it sure is suspicious.
That's an interesting idea, and there's actually something related to this that I think backs up this point. So clearly Bitcoin was neutered, right? Bitcoin is not being used as peer-to-peer digital cash, and all of the enthusiasm and merchant adoption and things that were happening up until 2017. Which, by the way, if you didn't know this, Microsoft, Expedia, Overstock.com, there were real businesses that took Bitcoin directly, not through any custodians or any third parties. That actually happened. That's a part of the history here that people aren't aware of. But there are kind of two forms of CBDCs that happen. So I mentioned Epstein funded 3 developers explicitly. One of the developers is a guy named Corey Fields. Corey Fields is the co-author of what's called the Project Hamilton white paper. The Project Hamilton white paper is essentially a retail CBDC pilot project between MIT and the Federal Reserve Bank of Boston. And this pilot, it's been a successful pilot. They've actually built this technology. You can Google this, you can read their white paper, you can read the results. Project Hamilton can do 1.7 million transactions per second. And I've actually talked to a developer close to the project who says they'd actually pushed that to 1.8 million transactions per second. So Epstein's cementing, Bitcoin at 7, while a common developer that kind of helped freeze Bitcoin at 7 went on to build something that does 1.7. But I think the biggest scandal of it all is what I've been saying is I think Tether is effectively the backdoor CBDC. And this is where the story gets even more bizarre. So Tether is a very popular stablecoin. And in fact, stablecoins in the last year, people have done, I think, $33 trillion worth of transaction volume using stablecoins. It's more than Visa at this point. But at this point, this is where now Howard Lutnick enters the picture. And if you've been following this, and I'm sure if you're following Shannon's show, I know she's talked about it. Howard Lutnick is our Commerce Secretary, who is recently under fire for having lied about his relationship with Jeffrey Epstein. Howard Lutnick is Jeffrey Epstein's next door neighbor. They've done business deals together. Lutnick has been to Epstein's apartment. He's been to Epstein's island with his family. Epstein donated like $50,000 to an event in Lutnick's name. And this is what we know, right? I mean, it's probably more than that. And Lutnick just flat out lied about it. But the interesting story is this: before the election, Howard Lutnick is the CEO, or was the CEO of an investment firm called Cantor Fitzgerald. And this firm invested $600 million into Tether in exchange for the kind of exclusive contract to manage all of the treasuries that back Tether. Now, this is a really interesting thing to do, considering that, one, Tether has never been able to complete an audit. And in fact, during the time period where this Bitcoin, as peer-to-peer cash to digital gold narrative happened, they were found to only have, I think by the CFTC, 26% reserve. So rather than having $1, they had like 26 cents backing every tether, $1 worth of tether that they created. And 50% of the price increase in 2017, when this narrative shift happened because of Tether that were printed and essentially backed by mostly nothing, right? So Lutnick cuts this deal to manage all of these treasuries, and Tether wasn't required to, by law, to be backed by treasuries. You could use gold or Bitcoin or whatever it happens to be. Then comes out of nowhere to get involved in politics. Now, when I say nowhere, in 2016, Howard Lutnick had done a major fundraiser for Hillary Clinton. So he is not a big part of Republican politics, not even a big part of Trump politics, and goes from that to being the chair of Trump's transition committee, which the transition committee is responsible for recruiting cabinet members. And he even tried to put himself up to be Treasury Secretary. So he cuts this deal to back treasuries, to back to manage all the treasuries on behalf of Tether, and then tries to become the Treasury Secretary. That fails. He becomes the Commerce Secretary, but then he actively pushes the Genius Act. And when I say that Tether and stablecoins are backdoor CBDCs, I mean in this sense, under the Genius Act now, if you are a stablecoin issuer, you are required to back your stablecoin by treasuries. This means Howard Lutnick is the single biggest beneficiary of the Genius Act, but it also means that we're now creating digital dollars that are backed by treasuries. And whereas right now we have this Federal Reserve, which is a group of shadowy banks that issue our currency today based on debt, you now have just backing Tether. So this is like a scam of just ginormous implications. And you have right in the middle of this Epstein, Lutnick, and Pierce. So sorry for that.
And
but anyway.
no, that's amazing. And by extension, Blockstream as well. Now, I had heard most of that story. I did not know that he paid Tether for the ability to hold their treasuries for them.
Yes.
Wow, that's a big piece of the puzzle there. Dang.
It's next level. I mean, again, people talk, well, the U.S. we're the worst ranking we've had for corruption. But I mean, you look at this and people complain about Nancy Pelosi in insider trading. I mean, I don't even know where you begin to call cutting a deal to manage treasuries and then, pushing through the legislation that you benefit from. And it's now essentially the platform for the digital dollar. So, yeah.
Wow. That is, that's mind blowing, Aaron. That's mind blowing. That's really bad. And if I'm not mistaken, I think Tether is now valued as a company in the tens of billions of dollars. If I'm not mistaken.
I'm sure it is. Because the amazing thing is they've been printing these tokens out of thin air. And I just want to frame this for everyone. The whole point of Bitcoin originally was peer-to-peer cash with no third party. What people are excited about now is creating a digital token that can be tracked, programmed, and censored by the government that's backed by fiat. Like this is the complete inversion of the purpose or the utility of this. It couldn't be a bigger diversion here.
So I just Googled just to see if we could come up with anything. This is from a CNBC headline. It says Tether's CEO confirms major capital raise at a reported $500 billion valuation.
Yep.
Okay. Well, all right. So this is another one of those examples where for years and years, there's been smoke, and strongly suggestive that smoke is coming from a raging fire.
Yeah, I mean, I'm actually calling this the creature from Epstein's Island. What's going on now with this entire debacle leading to stablecoin issuance, and so it by the way, so it gets worse. So what I found today, because again, I'm coming at this from the standpoint of I thought maybe Epstein had funded MIT, who worked on these CBDC things. Maybe he funded these Bitcoin core developers. Mm-hmm. But the extent to which he's involved, he actually was brought in to advise Gary Gensler before he became the chair of the SEC. And there's an email exchange between Larry Summers and Epstein about this. Larry Summers referred to Epstein as Mr. Money, and I think way going back to like 2013, reached out to Epstein and said, "Hey, as Mr. Money, what do you think about Bitcoin?" And Epstein's response was something like, "Well, money it doesn't comply with money transmitter." He basically listed off a whole bunch of stuff that indicated that his bias towards actually having CBDC level surveillance. He was expressing concern, and there's all this background back and forth with he met with this guy Amir Taki, who he didn't like because of his kind of extreme views on peer-to-peer digital cash, and so Epstein was involved in policy. Epstein was not just a passive investor. There are a lot of people that are trying to write this off as, oh, well, he was managing a lot of money and he's just placing a whole bunch of bets. When you actually look at the kinds of things that he was investing in, he tends to invest in things that he can control and influence from a regulatory perspective. I think there's another one in there where he was meeting with Treasury to talk about Bitcoin. So this is, and we haven't unraveled it all yet. We're only partially through the information in the file.
Yeah, this is a live thing that we're trying to figure out here. I'm literally doing a Google search as you're talking, trying to go, wow, is that number right? I mean, I get the impression that the Tether CBDC world, that's really, I think, what this is all about. I think those are actually the big players. I think when you're talking about the power of central banks, you're talking about arguably the greatest, worldly power that we know of. And it would make sense that when they move in, they're going to move in big. In fact, in that CNBC article I was just skimming through, they were looking to raise between $15 and $20 billion in exchange for a 3% stake in the company. So they're looking to raise $20 billion, right? And at a company valuation of $500 billion. That puts like the other crypto games to shame. when you're talking about $500 billion valuation, and if I get my story correct, the person who is the Cantor Fitzgerald is the company holding the reserves on behalf of Tether, and Howard Lutnick, the Secretary of Treasury, no, the Secretary of Commerce,
Yep.
is the guy who was either the present or former CEO. I mean, you are talking, that's big league now. You're talking big players. This isn't some like aspiring young, idealistic libertarian crypto techie guy. You're talking the big dogs.
You're absolutely talking the big dogs. And by the way, $20 billion, I mean, it wasn't too long ago that the entirety of the venture capital space was $100 billion. So, I mean, this is an amazing amount of money. The thing that concerns me about this, and I was trying to warn people about Tether before the election. I think that the Tether is now almost too big to fail. I mean, again, they've gone from not being able to pass an audit, and now they have all of these politicians involved. There's another guy named Bo Hines who was brought in as Trump's crypto advisor. He pushed the Genius Act through. And then 10 days after the Genius Act is enacted, he becomes the CEO of Tether USA, which, by the way, even as far as revolving doors go, I mean, we're used to people, for instance, working at the FDA, and then they wait a year and then they go and work for Big Pharma. This guy waited 10 days. Like, this is just unprecedented. Tether's also gone out and bought massive amounts of gold. They're buying land all over the place. And again, this is with what appears to be based on actions taken by the CFTC in the state of New York. These were tokens that they created out of thin air. They became essentially a meta Ponzi, a Ponzi on top of the dollar itself. What I've been trying to warn people about isn't just the Genius Act, to me, is the backdoor CBDC. The Clarity Act, though, and I'm trying to figure out how to communicate and express this, is even worse. People think the Clarity Act is about providing clear regulation for buying and trading cryptocurrency. It's not. It's about adding CBDC level surveillance to how we trade all assets, including real world assets. So it will include stocks, bonds, gold, silver, oil, your house, everything else. Money only represents 5% of global assets. It's these other assets. That is what the Clarity Act will empower. And it adds massive surveillance. Under the Clarity Act, your transactions will be tracked in real time, and they're required to hold your records for 5 years, share those records with multiple federal government departments, and also foreign central banks. So when people are talking about the Clarity Act, this is what they're signing up for. The breaking news on this is Cantor Fitzgerald is right in the middle of setting up the infrastructure to tokenize all of these real world assets, including national assets. There's a big push now for a sovereign wealth fund, and there's talk of selling off our nation's assets, and Cantor Fitzgerald is in the middle of that process as well. So I can't express enough how much work everyone should be doing to kind of crowdsource research on Howard Lutnick, Brock Pierce, and Epstein, and map out how all of this works, because this is the digital prison. This is kind of the 1984 scenario people have been worried about. And it's not coming from Klaus Schwab and Bill Gates. It's coming internally without any resistance. This has mostly been cheered, largely, I suspect, out of ignorance.
Yeah, that's this is all very, very important stuff. I feel like I'm participating in the show and also watching the show along with viewers, and I'm like, geez, that's a good call to action. Let's do something about it. It makes me think too. I remember actually, as I was finishing up writing the book, sitting back and thinking, in hindsight, I don't even feel like they had to work very hard to hijack Bitcoin. If I'm being honest, the social process was so broken. The people were so naive, idealistic libertarians, like preposterously naive. The idea that all they had to do was prevent the blocks from scaling, prevent the block size limit from being increased, and like make a bunch of empty promises for a few years. That just seems so low level. It doesn't feel like they really had to do much compared to what. Now, these are organizations. If we're talking about, this level of, deep state, where you're not even talking about a deep state, you're talking about a deep network, like international network that you know, maybe has influence over the deep state for all we know. The idea that like they had to, these are people that can topple foreign governments. Okay, these are people, these are institutions that have the power to, topple dictators and, change political structures around the world. They have a track record of like multiple decades of doing this. So the idea that they're just going to sit back and just watch Bitcoin compete to be an alternative money with no interference is like unacceptably naive. And so in hindsight, it makes me think, oh, okay, this is why they had to do such little work, relatively speaking, because maybe we didn't even make that many inroads in Bitcoin. Maybe it wasn't that much of a threat, just because the social structure was so easy to hijack. And all they needed was, what is it, 2026? They needed a good, give us 12 years, and we're gonna completely take over the digital currency space. Bitcoin is something in the background now. Yeah, you buy it, you hold it, whatever. Maybe you make some money. Doesn't matter. Meanwhile, we're talking about the rolling out of maybe a digital asset system where you're talking about selling off U.S. government national assets. It just makes crypto and Bitcoin look so much smaller by contrast.
It does, but the challenge is that there are a lot of people that believe that Bitcoin is freedom money. They're buying the vision from 2012, but what they're selling is something completely different. It's, I call it hijacked digital surveillance gold. Yeah. And most people just don't know better. Like, I interact with a lot of these people online, and frankly, most of the Bitcoin maxis have blocked me. But if you're new to Bitcoin post, say, 2018, and you read the Bitcoin Standard, a lot of times people measure, well, you need to study Bitcoin. And their version of studying Bitcoin is watching 20 podcasts that were also developed by Bitcoin maxis, where they're basically a gigantic echo chamber.
Yeah.
But they think that because they've spent a lot of time watching propaganda, that they're educated on the topic. I'm not blaming them, because frankly, it's been a little difficult to get the hijacking Bitcoin word out in light of, what happened to Roger being arrested in Spain 3 weeks after the book was published and threatened with life in prison, basically. So people have not been exposed to this information. But I think right now, you've got to be feeling a bit vindicated, I would assume.
A bit, yeah. It's a very weird feeling, especially because, I was personally complaining about the trajectory things were on in Bitcoin for more than a decade. Starting in, I wrote What's the Big Deal About Bitcoin in the end of 2014, and we were having scaling discussions back then. So the idea, being this, well, at the time it was not a minority voice, but especially after 2017, it became minority perspective that's mocked and dismissed. I've said before that it's like the people in our camp who are called big blockers, right? We wanted Bitcoin to scale with big blocks. The big blockers are the anti-vaxxers of the crypto world. It was like this taboo thing. Oh, they used the most crazy, ridiculous idea. I can't believe that's this, shame on you for even mentioning it. Well, in hindsight, the more we learn, there's some wisdom in some of the anti-vax hesitation, and we're learning the big blockers in crypto. We weren't just saying plausible things. We wound up being right at a level that in hindsight looks pretty extraordinary. When I 5 years ago, I wouldn't have thought to myself, all of this smoke is going to lead back to fire on Jeffrey Epstein's island. Like the level of corruption, even though I thought it was pretty great, we had lines going to the U.S. government. I wasn't even thinking this big in terms of how corrupt the whole situation is, and how the Bitcoin was. I think back to when I wrote the book in 2014. Idealistic stories being told about Bitcoin. It's challenging to the financial establishment. And I didn't realize, I suppose, if that's true, We're dealing with a possible technology that is truly revolutionary at a historic level. And because that's the case, it is not going to be permitted to succeed. There's like a 0% chance that this technology and that incarnation of it could have succeeded because we were right over the target and we didn't even know it. So yeah, so in hindsight, it's a very bizarre feeling to feel vindicated like this, and vindicated in each passing day. People are digging through the Epstein files, finding more connections here and there, and it's like, oh my gosh, I guess after all, go figure, Bitcoin really was hijacked.
Well, here's my concern. So my concern is, to me, the evidence is certainly overwhelming, but will enough people hear about it, and will it change anything? And I would tell you, one of the things that I find frustrating is I watch Trump, and they brought in Howard Lutnick in front of Congress to ask him about Epstein, and effectively he lied, and then his response was, well, I only met with him, the times that are outlined, I couldn't remember before, but the only times I met with him were these few times that are now available in these documents.
Uh-huh.
And Trump's response was, like a day later, to have Lutnick next to him in a press conference and basically brush the whole thing off. So here's the problem that we have. The problem is we have these backdoor CBDs. We have this digital surveillance. We have Real ID, which is a digital ID in 15 states being pushed out digitally to all 50 states by 2027. We have Palantir AI connected to government databases through Doge. So the digital control system has rapidly accelerated. So in light of the new information, in light of the fact that we know Bitcoin was hijacked, for one, that should kill the Clarity Act. People shouldn't be debating this new, regulatory regime in light of this, but yet the administration is putting their foot on the accelerator. So I guess what I'd say is, what can we do to? It's not enough to be right. How do we get this information out so that people have some informed consent, I guess, about what's going on in the world with respect to digital surveillance?
I know there's a guy I'll put you in contact with. This is his thing. His name's Aaron Day, and he's got some good ideas about what we're supposed to do. I'll be honest with you. I don't know. Like, if I had to predict based on what I have seen, what the success of the propaganda over the last decade, it's hard not to be pessimistic. The fact that stable coins are rolling out and they are going to be more convenient than anything else, the trajectory that we're on now, it's like, to be realistic, it's hard to imagine that's not going to find some success. And I know you and I are both excited about some privacy coin projects, like Xano is something I know you've talked about. I've talked about, Roger Vere's talked about. Even something like that, could this just be a situation where, if it really truly did have success in providing alternative money to people, would that just be co-opted via the same means, via social means? So, what do you think?
Well, you and I talked about that at PorkFest, and I don't think we actually came up with a good conclusion to that yet, which is that how do you stop the fact that in the end humans are involved with this technology, and frankly, people, like, now that we're learning Epstein, not just in crypto, people weren't thinking about Epstein with respect to crypto. If you look at all of the things that he's involved in, there seems to be a clear kind of process for hijacking things.
Yeah.
Right? So are we immune to that now? I mean, I think we have awareness of it, but even is awareness of it enough to prevent it from happening again? I don't have an answer to that.
Yeah, I know one of my friends, Isaac Morehouse, frames it as an eternal game of cat and mouse. That the powers that be are always looking to eat the mouse, and the mouse is always looking to escape, and that game is just going to continue being played. So maybe we get a few years of freedom in privacy coins, and then maybe there will be another innovation that we get excited about. And maybe the expectation, we should say, the expectation isn't we're gonna win and conquer the enemy once and for all. It's maybe we get a few years at a time of some reprieve from the technocratic dystopia.
Well, I'm hopeful that people actually recognize that we are up against an enemy, because a lot of times I think a lot of, even I was like this for a long time up until maybe 2008. I thought a lot of government activity was incompetence, and I've since learned that the way that this functions is actually based on malice, which is hard. I think most people have a hard time I have a hard time understanding how people behave like the people in the Epstein files. Nevertheless, they do behave that way, and these types of people tend to get into powerful positions. So maybe if there's a mass awakening on that front, then we'll all be kind of less naive in general. And if that hits a critical mass, maybe we've got a shot.
Yeah, and I don't want to paint the picture that the world is falling apart, because I don't think it is. I think, even if we live in a world in which there is, unfortunately, centrally controlled currencies at a even greater level, that isn't the end of the world. There's still, you can still have loving relationships, and like the sky's not falling. So when I say dystopia, don't get me wrong. I'm not saying like go jump off a bridge. It's all over. It's just, maybe we have to be realistic that there are some parts of we're fighting an enemy. If you care about freedom and goodness and love and truth, we're fighting an enemy that has vast resources and been around for a long time. And maybe we should expect this is a battle that we're never going to permanently win, perhaps.
Or at least we need to acknowledge that it requires perpetual effort. So, all right. Well, we're right about out of time. I really appreciate you doing this. And, one of the things I say is nature will truly be healing when more people have read Hijacking Bitcoin and the Bitcoin Standard. I truly encourage everyone to go out and get a copy and read, more importantly, Hijacking Bitcoin. It will change your entire perspective on everything you've heard about Bitcoin. So Any last words?
Nope. I appreciate all the work that you're doing, Aaron. It's very important stuff. You taught me some things in this conversation as well. So thank you.
Excellent. Thank you very much. All right.
Hey everyone, I just wanted to take a moment to thank one of my longtime friends, associates, my financial advisor, and a beloved sponsor of the Shannon Joy Show, Don Polano over at PCM and Associates. Don Polano, as many of you know, was the very first Shannon Joy Show advertiser almost 12 years ago, and he's been with us ever since. I trust Don Polano. He manages some of my assets and my retirement fund, and he's offering his services to all of you. He can take clients anywhere in the country and even across the globe over at PCM and Associates. And as you guys know, it is so important today. There's so much volatility and chaos. You need a human being, a person that you trust, and a person that shares your values. And that's Don Polano at PCM and Associates. So if you are looking for someone to help you manage your retirement or have investment advice, please consider calling Don Polano over at PCM and Associates. His number, 1-800-536-1368. That's 1-800-536-1368. And of course, you can go to PCMPolano.com. That is PCMPolano.com to learn about all of his services and get in contact with his team. Again, so thankful for Don Polano at PCM and Associates. And I think that you are really going to appreciate his services. So that number again, 1-800-536-1368 for a financial advisor that you can trust.